According to ratings agency Fitch, growth in the Turkish non-life insurance market is at an all-time high. With non-life insurance penetration at just above 1%, Turkey is considered to be a very promising country for the insurance sector. To speak more on this, I'm joined by Yilmaz Yildiz, CEO of Zurich Sigorta. Yilmaz, what is driving this growth and how has this impacted Zurich's strategy in Turkey?
The growth in Turkey is based on two major impacts, actually. One is the economy's size and growth rate, and the other one is the favorable demographics. If you look at the Turkish economy's size, it's the 6th largest in Europe and 17th largest in the world. And in a couple of years, it'll be a $1 trillion economy. And in terms of growth rates, after China and India, it has been one of the fastest growing economies in the world because the economic crisis of 2008 did not really impact it negatively. Turkey got into the crisis with very strong fundamentals. On top of that, if you look at the favorable demographics, 50% of the population is under 30. Population growth is still healthy. All these come together, actually, the right macro fundamentals, the growth and the favorable demographics to create a really strong momentum for the economy, hence for the insurance market. In Turkey, when we talk about insurance, in fact, it's about a $20 billion market, which is growing anywhere between 15 to 20% per annum, which is quite big. And if you look at the fact that the insurance premiums to GDP is less than 1%, the penetration is so low and we have huge growth potential. The combined is a very strong environment for further investment and a more, let's say, bright future for Turkish insurance industry overall.
A lot of international companies have entered the Turkish market. How has it impacted the local industry?
That has meant a very big popularity in terms of investment, foreign direct investment into a Turkish insurance market. And if you look at the non-life insurance market, 9 out of 10 is foreign-owned. And then if you look at the market as a whole, the foreign-owned players were 8, now it's 35. The interest is there. And it looks like there will be more demand. And it's both in non-life, but also strongly in life and private pension side of the business, which is growing just as fast, if not faster. But I think the foreign investors will need to do more to get the returns they have targeted when they were initially entering the market. And that will take some restructuring, that will take some more, I think, more sophisticated underwriting, better cost management and all of the basics to manage a good insurance company.
With Turkey hoping to join the EU, how is the insurance market responding to this?
The move towards EU, in fact, for all of the sectors meant a realignment with EU norms and regulations and laws, and insurance has been just like that. We could actually classify those changes in a number of buckets. One is definitely the regulation is one of the biggest implications of that. On one side, Solvency II is an important matter, which basically will require better risk management, risk adjustment, and probably higher solvency ratios, higher capital for insurance companies. Especially small to mid-sized insurance companies will be impacted substantially, and then some of the big ones as well. The second has been regulation on company financials, better or more strict reserve requirements. And that's also very important because insurance is one of the sectors in which your reserves will determine your financial health. So that part has been quite important. The other one is mandatory insurance products. There have been, because of the changes and because of the alignment with the EU, many mandatory products that previously did not exist. The fourth, just like everywhere else, it's the customer rights and how insurance should be sold and how customers should be informed before and after the sale so that they know what they're buying and there's no mis-selling or aggressive selling tactics in place. So the full picture is what we call enlightened regulation, which actually supports the growth while maintaining the health and sustainability of the insurance sector in the mid to long term.
How have government initiatives impacted the sector?
The ones that I've mentioned are quite positive, actually. I very much support most, if not all, of the regulations that have been in place. First and foremost, the regulation has to set, let's say, the big picture in place, right? And that was the EU and the whole EU integration and alignment with the EU. So I think within that picture, what has been done, very positive steps. So overall, I'd see that the regulation and the government has been very supportive of the sector, and it looks like it will continue to be so.
How have geopolitical issues around Turkey impacted the industry?
Of course, there are some very unfortunate things happening, especially in the Middle East, but still, if you look at our eastern neighbors, Syria, Iraq, Iran, the impact has been minimal. Iraq is a very big trading partner now, and now with the sanctions with Iran released a little bit, Turkey is expected to benefit commercially from that. So overall, minimum impact really, and the economy is growing, and we're isolated from some of the unfortunate events happening in that region.
And finally, how can the insurance industry support Turkey as a growing economy? And what is Zurich Sigorta doing about this?
Turkey is a manufacturing services economy. So what happens in the economy has profound impacts on insurance. I mean, if you want to export something or import something, it means marine insurance. If you want to build a factory, it means property insurance, liability insurance, and many others. If you're getting a loan from the bank, you get a life insurance, but then you get home insurance. So if you look at it, what happens in the economy in general versus insurance is very much interlinked. Employment is also a very big issue. More than 200 to 300,000 people are working on insurance. It's usually the more educated that work there. So to that end, insurance plays a very important role too. So going forward, we think that we're very well positioned in terms of our multi-segment, multi-product, multi-channel approach. And we've done quite a lot to restructure our company so that on one side, we can compete among those 35 new global or international players that are in the market. And for us, it's growth that's important, but even more important is to be consistently profitable, which we are working hard and which we think we can deliver. And at the end, our mission is to be the preferred insurance partner for our customers, for our employees, and of course for our shareholders. And we think that we're very well positioned to make the most out of Turkey's high growth rates and then favorable demographics.
Yilmaz, thank you.
Thank you.